It is time for the March ADP employment report, and the one and only Steve Leisman has the number. Steve.
Andrew, thank you. 455,000. ADP says private payrolls in the month of March grew by 455,000. They revised up their prior forecast for February to 486,000, still well below the 678,000 that we did last month. But looking at the numbers or the details, goods sector doing quite well, nearly 80,000, and a big jump on the service side. We'll show you some more detail on that in a second. Non-farm payrolls estimate for Friday is 490,000, so I would not expect much change at all in the consensus as a result of ADP here. Moving on by business size, we did see pretty good distribution. Small business up by 90,000. Remember, that was a negative last month, and there was some concern maybe, and I think it's still a decent concern, that small business is losing out to larger businesses in the quest for workers, given how scarce labor has been. Medium up 188,000 and large businesses up 177,000. Now, looking at by industry, we are seeing still a continued rebound from the Omicron slowdown. Leisure hospitality surging by 161,000. This meshes with the high frequency data we were telling you about. Trade transport up 49,000. And manufacturing still doing well. We did see 9,000 in the natural resources mining. We'll see how much more we can do there, given your conversations, guys, about the mining more oil and producing more gas in this country. They're going to be constrained just like other industries, despite the huge prices and the demand. Joe?
Yep. Okay, Steve. Thank you. Joining us now for market reaction to this, Sarah Malik, Chief Investment Officer for Nuveen. Sarah, we've been kind of the best house in kind of a scary world neighborhood, and we've had some good stock market action where we know what's happening in Ukraine. It's just unbelievable, but it's far away, and it's certainly impacting Europe more than us, so that makes us attractive. We've got a COVID outbreak in Shanghai, but that's quiescent. Maybe it's on the rise here, but is this just a brief respite from the problems of the world that has not today, but we have been in a little bit of an uptrend as far as equities, a bounce back?
Yeah, there's been three things driving the recent market rally, and that is peace talks for the Russia-Ukraine situation, the Fed, and also commodities. So with Russia-Ukraine, we think peace talks will be somewhat elongated, but the impact of global growth over the long run should be minimal. We see more of an impact in areas such as the EU, across financial channels, and commodities. Now, the Fed's been interesting. As they've turned more hawkish, markets have actually liked it because they feel like the Fed's finally getting their arms around inflation, and this reduces that tail risk of runaway inflation. The Fed is trying to engineer that soft landing. We're seeing earnings estimates continue to increase. We think actually earnings growth can carry the markets this year. And then, of course, commodity prices, if we can get to some kind of de-escalation in Russia-Ukraine, that would help put less pressure on energy prices, which is good for inflation. So all of that is why the market's rallied for the past 2 weeks. Today, I think the market's going to take a bit of a breather as we wait to see what progress we can make in Russia and Ukraine.